I had a bad experience as a child, and it stuck with me. It was actually the truth. I remember I was, I don't know, I must have been 10 years old. I went downstairs into the kitchen, and my mom was sitting at the kitchen table with one of our neighbors. They were just chatting, and I had this coffee. I said, "Oh, what are you doing?" And my mother turns to me, and she says, "Here," and she gives me her mug, and I take a sip. It was the worst thing I ever had, and I never got over it. So to this day, I'm an avid tea drinker, but it doesn't have the same ring as just a coffee break. So we're no coffee breaks, regardless of your beverage of choice. You can do whatever you like. So yeah, so today is April 10th, and obviously we are getting into the close of tax season here. Amazingly, I'm actually all caught up. We had some issues in terms of everybody giving us all their documentation at once this year, but I plowed through it, and uh, I'm hoping that yesterday was my last 12, 16-hour day ever. Uh, so we'll see how that goes. But there are some future plans for expansion that we have with Tax Sherpa. So if this is your first time joining us, I'm Neal, founder, chief tax strategist at Tax Sherpa. And what we do is we help our clients keep their money. That's the fundamental thing. Because the way I come at the tax world is that the less you pay the government, the better the world is. And so that works for me and that works for our clients. The only people it doesn't work for is the government. And I'm okay with that. So I think that's actually a good thing. So each week, I'll go over kind of issues that are going on, news and events, tax strategy, all that sort of stuff. Today is going to be mostly about news. There's been a lot of news in the last week, which is kind of a little bit unusual for the tax world. We don't usually get so much all at one time, but that's how it goes sometimes. So let's see if I can operate this streaming stuff without breaking it like I did last week. It's still a work in progress. I'm still learning, but we will figure it out. So let's go to share screen, share screen, and then tab, share, and okay. So I'm assuming this is working, and we can see this Executive Order 14247. So we're going to start a year ago. This was an executive order that Trump signed March 25th, 2025. And I went over it at the time. But, I was very skeptical, and I remain skeptical. So this executive order is titled Modernizing Payments to and from America's Bank Account. Let me see if I can blow this up so it's a little bit easier to see. Basically, the purpose is the continued use of paper-based checks by the federal government, including checks and money orders flowing into and out of the United States General Fund, which might be thought of as America's bank account, imposes unnecessary costs, delays, and risks of fraud, lost payments, theft, and inefficiencies. Uh, that's all fairly true, actually. Mail theft complaints have increased substantially since the COVID-19 pandemic. Historically, Department of Treasury checks are 16 times more likely to be reported lost or stolen, returned undeliverable, or altered than an electronic funds transfer. Maintaining the physical infrastructure and specialized technology for digitizing paper records cost the American taxpayer over $657 million in fiscal year 2024 alone. This I'm not sympathetic to. So, so what does all this mean? Effective September 30th, 2025, and to the extent permitted by law, the Secretary of the Treasury shall cease issuing paper checks for all federal disbursements, inclusive of intragovernmental payments, benefits payments, vendor payments, and tax refunds, except as specified in Section 4 of this order. So basically, he's saying we're not going to send checks anymore. And the rest of this also says we're not going to accept checks anymore. And at the time, I was talking about how unlikely I found this because so many people are used to writing checks. And in fact, there's actually exemptions and accommodations for people who don't have banking services or certain emergency payments or whatever. So, this is just a policy decision that was made by the administration saying that, we are quote unquote modernizing payments to and from America's bank account. Okay, fine. So fast forward to today, 1.4 million filers are delayed amid paper check phase out. So let's go to the other tab here. So I've really started liking Perplexity's Discover feed because it summarizes several different sources into a single article, which I'm liking a lot. But yeah, so there was a report out a couple weeks ago. So at the beginning of March, there was a report saying 830,000 people were delayed in terms of getting their refunds because the IRS sent out a new type of notice, which is CP is it 53 or 35? CP uh, let's see, it is CP 53E. So if somebody sends a tax return and they're due a refund by the federal government and they don't have direct deposit information or their direct deposit information doesn't work, the IRS is sending out a letter, which the code of that letter is CP53E. Side note, if you ever get a letter from the IRS and the letter code starts with CP, that means computer process. That means no human had a hand in writing this letter. It's just automated. So from the beginning of March to the middle of March, an extra, 600,000 uh, taxpayers fell into this issue. And so this is all because of Executive Order 14247, which we just looked at. And um, basically, what the notice is doing is, let me go over to the IRS saying understanding your notice. Let's go there. So this is the letter or the information on the website that is telling you how to interpret things. It's saying what you need to do. You have 30 days to update or add a new bank account. And you can do that by going into your irs.gov account if you have one, and update your bank information. If you do that, then upon successfully completing the process, allow 2 to 5 days for your refund information updated online. You can use the Where's My Refund tool to check your refund status. If you encounter any systemic issues that prevent you from updating your bank account information, read the message carefully and try again later. So, so yeah, the problem with all these systems is that the ID verification systems don't work for everybody. And sometimes what can happen is somebody has like a letter off, or if they have an apartment number, it's listed as APT, or as opposed to just like a number sign or unit or something like that. And any kind of mismatch in the information prevents correct registration. And I actually experienced this myself. I was trying to register one of my business accounts a couple days ago, and I'm looking at my tax return, I'm making sure everything matches, and I submit the address information for the business, and it says, does not match our records, and after a couple tries, it locked me out. So that kind of stuff happens all the time with these systems. But if you can get through the automated system, this is the best way to do it. So you log into your account and you update your bank information, and then they will process the direct deposit. Why do I need to do this? Well, because of this executive order. How do I know if it was updated successfully? You'll receive a message inside the system. Can I update my bank account if I call into the toll-free line? No, you can't. What if I added or updated my bank account but made a mistake? Can I correct it? No, you can't. So you only get one shot. And what happens if I don't do this, right? Then they're saying after 6 weeks, they'll issue a paper check. All right. So the IRS is trying to comply with this executive order. It is a major shift from the historical way of doing things, and that is just kind of how it is at the moment. The major problem, though, is that let's say you submitted a tax return and either the direct deposit information had an error, or you didn't indicate any direct deposit information, and you get into the system. And let's say you need to call somebody. There needs to be a human being at the IRS that has to do something, press a button, enter a piece of information, or, whatever. The next problem is uh, the IRS hired just 21% of planned staff as tax deadline nears. So they had planned to hire about 2,200 people, and they've only hired 21% of that. So about 450 people have actually been hired. And this is on top of losing 27% of the workforce from Doge and from people taking early retirement and all the chaos that has happened since the Trump administration started. And to fill the gap, this is the hilarious part. Uh, we actually sent out some emails about this. The agency has reassigned more than 800 employees from the chief of staff's office to processing and customer service units. But after a 12-week training period, those workers are not expected to be ready until well after the close of the current filing season. So they're taking 800 people from different departments, giving them a 12-week training, and who knows? I mean, the usual state of affairs with customer service at the IRS is pretty poor, and their knowledge is pretty lacking. But they're taking IT people, which is, if you go into the details of that story, that's what it ends up being. These IT people working for the IRS and reassigning them uh, to answering tax questions fundamentally. So that is still to be determined as far as how effective that will be. But the the thing that's like the cherry on top is that now the IRS plans to also cut nearly 4,000 more workers despite tax season starting. So, there's a guy who's running the IRS right now, the CEO of the IRS. I don't know how to say his name, Bisinero, something like that. Um, and it is hilarious to me because the IRS is not an organization that has a CEO position, but I think they've had 7 leadership changes in the last year and change since Trump took office, and so it's just been a circus over there. So Besant, who's the Secretary of the Treasury, he had a temporary assignment kind of overseeing the whole thing, but that expired now. And so now they have this so-called CEO who's running the ship and has not been appointed, has not been confirmed by Congress, nothing. So, it's just kind of, we're doing this until otherwise, right? And he has had statements saying that, oh, the IRS is at the perfect staffing level. And fundamentally, um, what they are what they are saying is that, oh, we're going to use technology to replace all the people that we don't have anymore. And if you've been around a while, you might notice that the IRS has lots of promises about technology going back decades. Um, but their results are few and far between. And maybe you make the argument that says, like, oh, there's lots of stuff you don't know about things that are going on behind the scenes. Okay, maybe. Um, but all I can see is that, I have to deal with the IRS every day, and their systems are terrible, and that's just the fact of the matter. Um, so so now they're planning on cutting more people. So effectively, where the state of things right now is that if you're filing things electronically, those are processing mostly just fine. There's issues that have been consistent issues, like if you have a corporate filing and the status of the type of return being filed for that particular EIN does not seem to have any consistency year to year, which is a problem we have to deal with every year. But if you're filing a 1040 and you send it in and it processes and you get direct deposit instructions, or if you owe money, um, all of those are working fine. It's anything requiring a human being that is taking forever. We have clients where we sent in something to the IRS in November of 2024, so over a year and a half at this point, and it's still waiting to be processed because there was a report from the uh, was it the Inspector General? There were, or it was either the Inspector General or the GAO, one of those two, because there were reports from each of them, and they said that there was 2 million open files at the end of 2025, like sitting on people's desks effectively. And that is far higher than what is normal at the end of a given year. So, things are just stacking up and they're going to be firing 4,000 more people. And, you know, what's going to happen to that work that still needs to be done? It's like, well, somebody needs to do something. And if you're cutting the workforce, then there's that many fewer people to do that work, and it's going to take that much longer to process anything. So, it's just a disaster when it comes to the human element of the IRS. So that's kind of the state of things right now. With that said, with that said, uh, the average tax return is higher now because of the One Big Beautiful Bill Act. So the average tax refund tops $3,500, which is up 11% compared to the prior year. And a lot of that is because of the One Big Beautiful Bill Act. We got a larger standard deduction. We got the no tax on tips, no tax on overtime, the senior deduction. All those kinds of things are adding to the deductibility of income and is lowering people's taxes. So that's all to the good. Uh, But larger refunds have fueled a rise in discretionary spending on electronics, hotels, restaurants. Americans are also channeling the money toward more practical needs. Bank of America Institute credit and debit card data shows filers paid off credit card debt, which is, I think, a good thing, topped off savings accounts, and covered essentials like groceries and rent, because we all know the price of groceries has gone insane. Rent is coming down in a lot of markets. Kind of depends on where you live, but yeah, it's I'm all for you know people keeping more of their money. That's the entire basis of what I do. However, however, uh, there is another element here. So this report came out a couple days ago. So part of the One Big Beautiful Bill was the no tax on overtime. Now, if you read the legislation, the actual text of the legislation, because it was passed in the middle of the year last year, what it said was that for people who have overtime, then it's too late to go back and fix the first half of the year. So what the legislation says is that for 2025, employers just have to make their best efforts effectively as far as reporting to the employees how much of their compensation was overtime and how much of that would be eligible for the new Schedule 1A deductions on overtime. So if you work 40 hours and you're not an exempt employee, so you're non-exempt, and you get overtime and you can get it paid time and a half, the half is the part that is a new deduction. So if I'm making $20 an hour and I go into overtime and I'm now making $30 an hour, the $10 an hour I earned is deductible on my tax return, subject to certain limitations as far as total amount and adjusted gross income and those kinds of things. But all the people that I've seen so far who have overtime compensation have been below those face outs. So everybody, at least so far, that we've dealt with um, has been eligible to take the full deduction, which is great. But this report comes out from let's see, who was it? The Tax Policy Center. So when the legislation was passed, this think tank, along with the Urban Institute and Brookings institutions, had projected that only 8.8% of taxpayers would qualify for this deduction. But 25% of the returns that have been processed so far are claiming this deduction. And I feel a little dumb actually that I even didn't think about this because it's like, well, yeah, if there's no checking, if there's no mechanism by which the overtime deduction can be verified, people will just make stuff up. And so apparently, about 17% of people are just adding in overtime that they may or may not have had. So 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 I don't recommend doing that. And in 2026, it won't work because they are changing the W-2 so that it will actually include that information on the W-2. It just wasn't possible in 25 because the law was passed in the middle of the year. This is a one-time shot, and it'll be really interesting to see how the percentage of people claiming that deduction changes in the next year, and we can compare it to the prior year and see how many people were making stuff up. So, it's a circus all around, basically. Um, I will tell you that we've had two cases in our returns where we actually ran into the new lowered excess business loss deduction limitation, and this is where um, if you have like day job income or retirement income, and then you have a business and you lose a lot of money on the business, there's a limit as far as how much you're allowed to deduct. That's different than the basis limitations that we've been dealing with for forever. And so that number was reset for 2025. Is going to reset again for 26, and it's much lower than it has been in the past. And so the net effect of that is like, if let's say you have a day job, or actually, yeah, let's say you have a day job and you make a whole lot of money. And then you take a lot of that money, that take home pay, after you've already paid payroll taxes and you've already paid, income tax withholdings. You take that money and you invest in a franchise or something, and you lose it all. let's just say it happens, um, you're still going to pay tax on the money that you made on the day job, even though it's gone, and you might not even have that much left. So, that's the reality that we've run into twice now, with clients, and the fact that these limits are a lot lower than they used to be. So we'll kind of see how that evolves over time, because there are scheduled changes to that limitation already baked into the legislation. But it is not a good feeling. I had one guy who lost $1 million, and he's still paying tax on 600 of it, basically, uh, because he got there was well, it was a whole thing. Be very careful who you go into business with, fundamentally. But yeah, that's a bit of the news about the chaos that's going on. So upcoming next Wednesday is April 15th. And if you have not filed your taxes already, here's the things you need to keep in mind. So number one, April 15th is the deadline to both file the paperwork and to pay the tax. If you file an extension, that is an extension to file the paperwork. It is not an extension to pay the tax due. If you haven't done your tax return, it's hard to know if there is a tax due. And you can think about historically, usually I get refunds or usually I owe. But that's not any guarantee with the current year, because each year is different. That's kind of the whole point of the thing. Um, so if you have a liability, you want to get as much of that covered by April 15th as possible. And you can make an extension payment. You go online, irs.gov/payments, and you can make an extension payment. And it will apply towards whatever balance you have due for tax year 2025. And the reason to do that is because there are three different penalties that the IRS assesses when it comes to late stuff. So one is failure to file. Filing the extension form, which is form 4868, or if you do the payment online, it's automatically filed through that. Form 4868 is the extension to file the paperwork, and that will eliminate any failure to file penalty. And the failure to file penalty is significant. It's 5% a month, and it caps out at 25% of whatever the tax is. But that could be huge. Like if you owe 20 grand, which some people do, then that's $1,000 a month extra that you're paying. So make sure to get those extensions in, if nothing else, right? And then there's failure to pay penalties, and then there's just underpayment and interest. So those are lower. Those are typically, it varies a little bit with interest rates, about 0.5% a month, which is a lot more doable in terms of covering the eventual cost. But just be aware that the extension is only extension to file paperwork. And if you need that, a lot of people are already on K1s. We've got a number of clients that we've done our side, and then we're just waiting on this statement from this company that will produce a tax return at some point, hopefully before October 15th. Because pass-throughs are due a month before the personals are due. And so the due date for S corps and partnerships is March 15th, and the extension date for that is September 15th. And that's a month ahead of the personal due date of April 15th, and then October 15th. But not everybody gets their stuff in on time. And so if you're waiting on a K1 from a partnership or something, then you're kind of stuck waiting until they get their tax returns done. And sometimes they're late, even after the extension. So just you do your best. And when it comes down to it, we'll file extensions. But if the extension date is coming up, we will file with what we have and then amend afterwards. So that's one strategy to deal with that. Hopefully you have some idea of what is actually going to happen in those cases. Usually that means things are not going well and you have a loss, which will reduce your taxable income, if anything. So hopefully that is the case. If you have a pass through like an S corp or partnership that's generating net positive income, then you want to take that into account when you file those returns. So keep that in mind when you are coming down to crunch time. So like for our clients, if somebody didn't have their docs into us by midnight on March 31st, you're going on extension. And we told all of our clients that, and a lot of people, we got a lot of paperwork on March 30th and March 31st. going through for the last couple weeks, just trying to catch up to all that, which is a scheduling issue that we're working out. Um, but uh, but yeah, so keep in mind the the things that we're doing now for tax year 2025 are just the last steps in the process. The planning that you want to do needs to be proactive throughout the year. And so, if you find yourself with a large tax liability in 2020, for 2025 that you're paying now, you want to ask yourself, am I arranging things in the best way? Am I taking advantage of all the strategies that are available to me given the types of things I'm doing, to given my facts and circumstances? And I'll tell you, usually the answer is no. And if that is you, then you can call us. Go to taxsharper.com. You can book a call with one of our with one of our experts, and we can put together a plan for you. You can go to other people. There are other people. They're not as good as us, but there's only so many people we can help. Also, part of what I try to do with these things and with the school community and with the modules I'm putting up there is to kind of broaden the scope of the information that people have access to. And I've been developing some software that is going to be coming live hopefully soon. I kind of got caught up in tax season and doing all those things. But tax season is ending next week, and then by the way, if you're a tax Sherpa client, we're going to be out of the office from the 16th through the 26th because we're taking a little bit of time off. But we'll be back in at the end of April and then on to regular hours in May. But but yeah, the what I what I want everybody to do is pay as little as possible. I want to reduce the tax revenue going to the government by $1 trillion. And I can't do that with just, the clients that we have, obviously. And we would not have enough time to service that many clients. But I can make that information available to you. And a lot of that is going to be, housed on the school platform. And in fact, I will drop the link to that here on the chat. Uh, so you can go there, you can join. It's free. There are upgrades if you want. We have the navigators where we get on a weekly call. It's Thursdays at 3 p.m. Eastern, and we talk about all these things. We talk about a lot more, and then we go over particular issues for people. And but the education part is all free for everybody. So if you want to learn more about tax strategy and learn about things that can apply to you, then come on by and join. The the last couple of weeks I've been underwater with the tax returns, but once all that is done, we'll get back to updating those modules basically daily. And I'm gonna I'm giving away everything. So I hope you take advantage of it, and I hope you keep more of your money. All right, that's my coffee for this week, and there's no call next week because I'll be at a conference. So we will go. We'll see you on what is that? If I could do math in my head anymore, the 24th. So 24th will be the next one, and we'll see you then.